Hey everybody, Nathan from Be My Neighbor Mortgage here, and if you have medical collection debt, you are going to want to listen to this. It's very important for your financial future. I'm not even going to try to summarize it differently. I'm going to read the press release from the CFPB yesterday. The CFPB finalized a rule that will remove an estimated $49 billion in medical bills from the credit reports of about 15 million Americans. The Consumer Financial Protection Bureau's action will ban the inclusion of medical bills on credit reports used by lenders and prohibit lenders from using medical information in their lending decisions. The rule will increase privacy protections and prevent debt collectors from using the credit report system to coerce people to pay bills they do not owe. The CFPB found that medical debts provide little predictive value to lenders about the borrower's ability to repay other debts, and consumers frequently reporting receiving inaccurate bills to being asked to pay bills that should have been covered by insurance or financial assistance programs. They quoted Rashid here, with people who get sick shouldn't have their financial future upended. The CFPB's final rule will close a special carve-out that has allowed debt collectors to abuse the credit reporting system to coerce people into paying medical bills they may not even owe. The CFPB's research reveals that a medical bill on a person's credit report is a poor predictor of whether they will repay a loan, and contributes to thousands of denied applications on mortgages that consumers would be able to repay. The CFPB expects the rule will lead to the approval of approximately 22,000 additional affordable mortgages every year. That Americans with medical debt on their credit reports could see their scores go up by an average of 20 points. The agency's action follows changes made by the three nationwide credit reporting conglomerates, Equifax, Experian, and TransUnion, who announced that they would take certain types of medical debt off of credit reports, including collections under $500, and that was in 2023. So after the CFPB raised concerns about medical debt creating reporting early in 2022, additionally, the FICO and VantageScore, the two major credit scoring companies, announced that they have decreased the degree to which medical bills impact a consumer's score. So the CFPB's final rule brings regulations in line with Congress's decision to safeguard consumers' privacy by restricting lenders from obtaining or using medical information, including information about medical debts. So the federal financial regulators later created an exception to this restriction, allowing creditors to consider medical debts, but this carve-out has enabled debt collectors to use the credit reporting system to coerce payments from patients for inaccurate or false medical bills. So the CFPB's new rule amends Regulation 5, which implements the Fair Credit Reporting Act, to end this exception and to establish safeguard rails for credit reporting companies, prohibiting them from including medical bills on credit reports sent to lenders who are banned from considering them. The final rule prohibits lenders from considering medical information. The rule ends the special regulatory carve-out that previously allowed creditors to use certain medical information in making lending decisions. This means lenders will also be barred from using information about medical devices, such as prosthetic limbs, that could be used to require that the device serve as collateral for a loan, the purpose, or the repossession. It bans medical bills and credit reports. So the rule bans consumer reporting agencies from including medical debt information on credit reports and credit scores sent to the lenders. This will help end the practice of using the credit reporting system to coerce payments of bills regardless of their accuracy. Lenders will continue to be able to consider medical information to verify medically based forbearances, verify medical expenses that a consumer needs a loan to pay, consider certain benefits as income when underwriting, and other legitimate issues. So today's rule, or the rule from January 6th, this action from January 6th advances the Consumer Financial Protection Bureau's work to protect consumers from harms from medical debt and coercive debt collection practices. In October, the CFPB issued guidance clarifying that debt collectors violate federal law when they collect on inaccurate or legally invalid medical debts. Previously, the CFPB published in 2022 a report describing the extensive and debilitating effects of medical debt, along with a bulletin on the No Surprise Acts to remind credit reporting companies and debt collectors of their legal responsibility under that legislation. The rule will be effective 60 days after publication in the Federal Register. Now, with all that information, what does that mean for you? Well, it means that if you were thinking you couldn't get it done because you've paid off your bills, you pay all your bills on time, but like a normal American, insurance doesn't always stretch and cover what we need. Some of us are way too underinsured, and we have run into medical debt and we couldn't pay it, and it goes into collections and it sucks. Well, you might have a way out now. A way to actually organize yourself to get ready to go buy a home, to invest in your future, because you do the best you can, and it might be time to go forward. If you've got questions, please reach out to us at Be My Neighbor Mortgage. My name is Nathan Nottingham, NMLS 270165. I'd be happy to talk to you and help you organize or find the professional that serves you the very best. I hope this brings you hope in 2025 for home ownership and affordability for years and decades to come. All the best, friends.